Hello, everyone, and a warm welcome to today's webinar concerning the topic, Is the World Deglobalizing? My name is Sasha. I work for St Alumni in the event and community management team, and I'm very happy that we have today Simon Evenett with us, who will tell us a bit more about how the future of globalization is continuing, what is happening here, what are we seeing or not seeing, and give us a bit more insight about that. Simon will share a presentation with us roughly for 35 minutes. Afterwards, we have time for a Q&A session till 1 o'clock. Then Simon has to leave us because he has a lunch meeting, he told me, with the WTO. So we want to make sure that he's on time for the meeting. And I'm very curious about your presentation, Simon. And I hand over to you, and I wish you, dear alumni, good entertainment and good learning session. Thank you very much.
Thank you very much, and it's a great pleasure to speak. I'm looking through the people on the call, and I see a number of former students, and it's very happy to see them again. A number of our alumni as well, and also some colleagues as well at the university. So welcome to you all. I will share some slides now and take you through my presentation. I hope you can see my slides. If not, let me know. Essentially, the question I have set myself is the world deglobalizing, and what's at stake for Switzerland? This is a question I'm going to break down into 3 parts. And these 3 questions were the ones we advertised, so I'm going to try and answer each of them in turn. Ultimately, I want to ask the question, first, is geopolitics the enemy of globalization as we know it? I will take you through a number of scenarios which on net lean towards the conclusion that geopolitical rivalry is certainly undermining our trading system and our capacity to engage in international commerce. Secondly, I'm going to ask, is the world breaking down into blocks? Here, I have a fairly nuanced answer for you. There are different types of blocks, and I'll take you through 4 different scenarios here. And then looking forward to 2030, what are the prospects for Swiss firms which are operating internationally? And for each of the scenarios that I lay out, I will draw out some implications. Now, I must say right at the beginning, there are 2 important preliminary comments. First, globalization has many different dimensions. So we have trade in goods, we have trade in services, we have foreign direct investment, cross-border movement of ideas and data being several dimensions. And there's no reason why all of those different dimensions must be changing in the same direction and the same speed. If anything, the data shows us that trade in goods the growth in that has slowed down quite considerably. Trade in services, especially digitally delivered services, has been surging for the past decade or so, and almost certainly surged during the pandemic era. When we come to foreign direct investment, again, the story is slightly more negative. It's probably the case that foreign direct investment flows peaked around 2005 when compared to benchmarks like world GDP and world investment. So that's moved in the wrong direction. And when it comes to cross-border movements of data, we see enormous surges. So there are different elements to globalization, and the idea that there is a simple answer to the question, is the world deglobalizing, doesn't take account of the fact that there are different dimensions of globalization. Some of them clearly are in a bit of trouble, like foreign direct investment flows and trade in goods. And I think this is what has caused people to start asking the question, not just is world trade or world commerce slowing down, but could it possibly be going in the wrong direction? And of course, there are some people who actually are advocating decoupling and the thinning of commercial ties. So for them, this deglobalization process is to be welcomed. So that's the first preliminary comment, which is that please never forget that there are lots of different types of cross-border transactions which we should be thinking about. The second preliminary comment to make is that as I go through my presentation, it'll be very clear that overgeneralizing is really perilous here. There are going to be very important differentiations across regions and across sectors. Some regions, as I'm going to argue, are going to do relatively well compared to others, and some sectors are probably going to face more geopolitical barriers to trade than others. And so, again, the answer that I might give to the question, what are the implications for Swiss business, might be very different for a firm operating in the medtech sector than for a firm delivering digitally delivered health services abroad. And so the differences there could be quite significant. So again, there is going to be important sectoral and regional differentiation in terms of what to expect. And since the Swiss economy has a very diverse set of economic actors and goods and services offered, then this will clearly mean that some sectors will probably prosper more than others as geopolitics interacts with other factors. So that's my opening slide, setting the scene. A little bit more of context can be provided by my second substantive slide. And this is a slide which is built on a survey that McKinsey just released of 73 CEOs of large companies, asking them what are the biggest trends to watch this year. And they have ranked them here from highest to lowest. And you can see that the top three are the rise of digitally disruptive technologies. So think of ChatGPT, AI. The second risk is of a prolonged inflation and an economic downturn. And a third is of escalation of geopolitical risks. So the principal discussion I'm going to have today is on the third one here, geopolitical risks. But I also will say something about the second as well, because I think it's the interaction between the macroeconomic fundamentals and geopolitics, which we will see more and more of in the years ahead. And so this hopefully situates the discussion as well. I'm not going to say too much about disruptive digital technologies, although digital technologies and artificial intelligence are becoming an important part of the great power competition that we are beginning to see between countries. And if you're interested in that particular dimension of great power rivalry, then I strongly recommend the latest podcast on the President's Inbox, which is put out by the Council of Foreign Relations in the United States. That podcast is all about AI and great power competition and situates the current contest in its appropriate historical context. And I think it's extraordinarily interesting listening. But I'm not going to speak too much about the first item on this list, but on the second and third items, I will spend more time. And the economic context here, I think, is very important, especially if one's going to draw out the implications for Swiss business going forward. So let me turn to those economic implications now and talk a bit about what to expect in the short to medium term. Now, as far as the sort of macroeconomic climate is concerned, I think I would break it down three important factors which I think you should have on your radar screen. The first is that historically we have unprecedentedly high levels of policy uncertainty. Now, in the past decade or so, economists have made a lot of advances in measuring or coming up with proxies for the level of policy uncertainty, the level of policy change. And these indices have been used by central banks precisely because they correlate very highly with investment decisions. So we find that high levels of policy uncertainty are associated with depressed levels of capex, for example. Now, what we have seen in terms of financial instability in the past month or so have added to the levels of policy uncertainty that were already registered in there. Now, to be fair, the levels of policy uncertainty are not at the peaks we saw at the beginning of the COVID-19 pandemic. Most indices don't show that. But for many countries, the levels of policy uncertainty are elevated compared to the last decade or so. So I think this is something we should expect to remain for some time. And let me just make a remark about the financial instability we're seeing at the moment. It's true, of course, that we saw several banks collapse in the past month, some on both sides of the Atlantic. But please remember that when we started the 2007 to 2009 global financial crisis, the first tremors were felt in July and August of 2007, and Bear Stearns didn't collapse until March of 2008. So this suggests that we have a long way to go before we know that we're out of the woods in terms of financial instability. So, and I think one of the reasons why there's a degree of nervousness in investor sentiment is precisely because we're waiting for other financial instability to hit the system. And of course, the cause of that financial instability is the reaction to the sharp increases in interest rates, which central banks have implemented in the past couple of years. Those interest rate increases have been the fastest increases that we've witnessed in 40 to 50 years. And a number of borrowers who had not anticipated having to repay interest rates at this level are clearly in trouble. So there's more, I'm afraid, to expect on financial instability, or turn that around. If all of the financial instability associated with the recent interest rate increases has occurred, then this would be extremely lucky. And so I think we can expect a bit more financial instability in the next year or so. So in the very near term, that is the thing to watch out for and to plan for. Over the medium term, we have a different set of macroeconomic considerations which will interact with the geopolitics. And that is that because of the huge debt buildups that we've seen in the past decade or so, not just in the public sector, but also in the private sector, there is going to be a tendency for central banks to tolerate moderate levels of inflation, if only to reduce the real value of outstanding debt. And in fact, if you look at both the United States and Italy over the past year, you see a big reduction in their public debt to GDP ratios, not because they're paying back debt, but because their GDP has been inflated by high levels of inflation. And so the desire to sort of wash some of that debt out of the system, or at least to reduce its real value, is expected to lead central banks not to push inflation back down below 2% as they previously did, but to allow perhaps moderate inflation of 3 or 4%. That pressure, I think, will be felt outside of Switzerland, and I cannot see Switzerland going along with this, but it will have two important implications. The first is that the higher costs of capital that we are seeing now are likely to persist, and this will increase the hurdle rates for CapEx. I'll come back to this point later, because one of the things we're seeing, as I've already indicated, we're seeing higher levels of uncertainty, higher costs of capital, and we're going to layer on top of this geopolitical rivalry as well. This is not a recipe for making long-term commitments in the years ahead. The second important consideration for Swiss business is if the medium-term scenario that I've described concerning price inflation abroad is correct, then we should expect the Swiss franc to appreciate even more against the euro and against the dollar. And this, of course, will have very important implications for the cost structures for outsourcing and for the price competitiveness of Swiss exports. So over the medium term, even without the geopolitics, I think you should bake in higher costs of capital, higher weighted average cost of capital, and an appreciating exchange rate. And that came from the macroeconomic side of the equation, not the geopolitical side, which will add, I believe, further uncertainty. The last sort of fundamental consideration I want to put on the table is just to remind you that when we think about where is the growth going to come from in the next 20 to 40 years, it's quite clear, looking at most of the forecasts out there, that emerging market growth driven by having larger labor forces and savings and investment, that side of growth, the growth equation in emerging markets, will begin to peter out and to run out by 2040. And then from 2040 to 2060, emerging markets will join the richer world, and growth in both places will be driven largely by productivity growth. So as I'm sure you remembered from your macroeconomics, economic growth is driven by three things, right? Innovation, more people, more capital. And what we're finding in almost all of the forecasts that I've seen over the longer term is that the expectation is that there will be much less labor force growth in the future, possibly reversals in some parts of the world, and smaller rates of investment. So growth will be much more driven by innovation and productivity growth. And here, unfortunately, the record is not very good in terms of seeing innovations translate into broad-based productivity growth. What this means, I think, then for Swiss businesses planning over the next few years is that through to 2040, most of the growth will be in emerging markets. And then after that, the emerging market growth will slow down. And so to the extent that there is growth worldwide, it will all be driven by productivity increases. So all of these very interesting developments that we're beginning to see on the technological side, watch for whether this transforms productivity growth. That is how productive you and I are. And if that isn't the case, then the world moves to a much more slower growth phase from 2040 onwards. Now, how does this interact with the geopolitical issues I'm going to talk about? Well, what it suggests is that the geopolitical factors which are unfolding now are going to be interacting with what's left of a reasonably positive growth scenario in emerging markets. And if the geopolitics lasts beyond 2040, we're going to have a combination of low growth and geopolitical uncertainty, which will further, I think, discourage firms from investing. So when it comes to the macro outlook, here I think I have tried to address what will happen in the near term, the medium term, and the longer term. And these are factors you should have at the back of your mind as you're contemplating the direction of your organization. These are factors which I don't think will go away. They're pretty much baked into the system. All right, so that's the macroeconomic context which I think I want to build on top of. And now I'm going to turn very much to the geopolitical factors. And I have two slides just to put a series of factors on the table. If you're looking for flashpoints, there are probably three which are on people's minds, and none of these will surprise you. The first is the refusal of the Americans to allow China to threaten American technological and military primacy. And this is really at the core of the issues. The Americans have realized in the last 5 to 10 years that China is very serious and that China has global ambitions, and the Americans are doing everything they can to try and slow down the Chinese catch up with them. And this manifests itself in things like very invasive export controls on key technologies. And I think we can expect those export controls to widen and broaden. In the advanced cutting edge sectors, this will then have big implications for which firms can sell into China, if any, who are based abroad. And of course, the Americans don't just restrict the exportation of technologies from their own country. They also have put in place rules which mean that if any Swiss firm has used American intellectual property rights or has used American staff, then they cannot export to China certain items. And these rules, which have been put in place in the context of semiconductors, I think we can expect will be expanded to other frontier technologies as well. So one of the reasons I said earlier that I thought that there will be differentiation across sectors is precisely because the cutting edge technological sectors are ones where the Americans will do their utmost to stop that technology getting into the hands of the Chinese. And so this intensified competition between the United States and China is growing, and the Chinese, of course, are not taking this sitting down. They are gearing up as well. You've probably seen in the last 2 weeks two important signals from Beijing. First, that the semiconductor sector is going to be rationalized. The Chinese are instead of having blanket subsidies in that sector, now are said to be targeting their subsidies and support to key firms which they think have a chance of taking on Western rivals. And then the other area, of course, is that the tech sector, which had been in trouble with Beijing for the last few years, is now being rehabilitated. And the goal, of course, is appears to be to ensure that China is well represented in all of the key digital technologies as well. So this rivalry between China and the United States is unfolding. I think the interesting question for Europe is whether or not Europe ends up siding with the United States or trying to maintain some type of independent position here. And that is a point I will come to later. The second geopolitical factor to raise, of course, is the ongoing conflict in Ukraine and how this plays out. It is now fairly clear that the United States has lined up very heavily behind Ukraine and is supplying it with money and weapons, and Russia is, of course, developing ties with China, and China at the moment does not supply Russia with weapons. At least that is what has been said publicly. But the question is whether this relationship between China and Russia will strengthen in ways which could cause the conflict in Ukraine to become a true proxy war between the United States and China. And so this is an ongoing, of course, area of considerable tension, and one which I'll come back to later because I think it has important implications for the scenarios that I want to talk about. The third big flashpoint, which is clearly out there, is the desire of the Chinese Communist Party to reunite with what they call Taiwan province. And this, of course, is an exceptionally sensitive matter. And the reunification is unlikely to be on friendly terms. At the moment, it seems that the Taiwanese are committed to remaining an independent democracy. And to the extent that that is the case, then we are on a potential collision course. As we know, the United States and Japan have committed to, or at least in part, to support Taiwan. Whether that translates into military support, we will begin to see. Now, Mr. Xi, the President Xi of China, has said that this reunification has to take place by 2049, the 100-year centenary of the Chinese Communist Party taking over. And if you work through the history of this, the last time China did something which really upset the West, which was the Tiananmen Square incident, it took about 20 years for China to rehabilitate itself. Well, if the Chinese are factoring in 20 years of rehabilitation, that suggests that the reunification has to happen before 2029, which means it has to happen in the next 6 years. If you look on the American military side, their assessment is that China may be ready to invade in 2027. Some have even come forward to 2025. But essentially, for any planning horizon in the near term, that is between now and 2030, needs to take account of the fact that there may well be a conflict in the South China Sea. And that conflict is likely to draw in, or could indeed draw in, Japan and South Korea. And that will then, of course, make the entire Northeast Asian region a particularly risky one. And I'll come back to that when we talk about this. But when I said to you there was regional differentiation, this is already one hint at that. So this is the third flashpoint that I want to mention. On top of this, we have some classic trend considerations which have geopolitical ramifications. The first, of course, is climate change and the fact that temperatures are increasing, and as temperatures increase, there will be more and more developing countries which will face extreme pressure in terms of lost land and alike, and this will potentially cause regional geopolitical tensions and possibly global ones as well. We also have the energy transition and the contest for resources associated with the energy transition, which could be potentially a flashpoint. And after all, let's not forget the Middle East is still a very important supplier of fuels to the West, and this is hardly a settled region. And lastly, of course, we have the growing potential for artificial intelligence to become, and other forms of digital technologies to transform geopolitical rivalry as well. So these are factors which are all in the mix as well, and ones which, as you can see, have received more and more attention from different media publications and alike. So when I think about geopolitics, I try and integrate my understanding of the flashpoints with these longer term trends. And in doing that, I force myself to try and come up with a number of scenarios which could shape our discussion, at least could be useful for thinking through what this might mean for Swiss business. So let me take you through this. Now, my goal in showing you these scenarios is to lay out 4 possible futures, to discuss what factors might trigger them or drive them, and then to draw out the implications for Swiss business. Now, in doing this, I will go back, I will be able to answer some of the questions I discussed earlier. Is the world deglobalizing? Is geopolitics going to help us drive deglobalization? And is the world going to split up into blocks? These questions will also be answered as I go through the scenarios, which I'm about to discuss with you now. And this really is the sort of main takeaway slide that I want us to reflect on. And so I have here 4 scenarios. It, of course, is possible always to look on the downside when it comes to geopolitical rivalry, but let's not do only that. I think there's also one upside scenario. It may be extremely rare or extremely unlikely, but we should at least acknowledge it. And this is, I've called this scenario guardrails. Why? Because President Biden has often argued that we need to have, or rather his country needs to have guardrails in its relationship with China. That is that there needs to be competition within boundaries. There will be competition, but there needs to be within boundaries, and there needs to be cooperation on certain key global challenges like climate change. And so one scenario to consider is that some type of détente is struck between the US and China. And that is that at some point, the rivalry either becomes so intense or so costly that both sides try and find ways to live with each other. And that détente could involve just a simple understanding between the United States and China on key factors, or it may spread to involve a return to multilateral problem solving in organizations like the International Monetary Fund, the World Bank, and the World Trade Organization. Now, to get this type of outcome, quite frankly, we probably need changes in leadership in both Beijing and Washington, DC. And so I think this, at the moment, the attitudes are pretty hard baked in to make this scenario less likely, but things do change and people change as well, personnel changes as well. If this positive scenario were to happen, then many of the risk premium on investing in China and in the United States would fall, and China could remain an export platform for Swiss business to the rest of the world. So to the extent that Swiss businesses have invested in China as a place to produce and export, then this would in no way be impeded, and in fact, the investments could continue. So I lay out this positive scenario, not necessarily because I believe it is likely, but I think whenever you're doing a scenario analysis like this, it's worth always asking, is there an upside scenario as well as potential downside ones, which we should consider. And so the first scenario then is perhaps a more positive one, and I'll leave it at that. I'll turn now to the 3 scenarios which I think are more likely. Let me start with the scenario which is already emerging. And this is one I've called fuzzy blocks. Here, what I have in mind are not a world moving into blocks which are defined in very, very clear terms. So we're not talking about a world where there is a Warsaw Pact, for example, where there was a pretty clearly defined bloc. Instead, what we're talking about is groups of countries which are somewhat aligned and sympathetic with one another, and there may be countries which are on the borders of different blocs. And indeed, in my view, Switzerland could well be such a country. So what I have in mind here is one fuzzy bloc built around an axis between Moscow and Beijing. So this could bring in some of the other countries which are sympathetic to both Moscow and Beijing. So this would include North Korea, Belarus, and the like. Then you could have a Western bloc, a Western democracies bloc, and that bloc may come into fruition. Much will depend on whether the European Union takes sides in the rivalry between China and the United States. That rivalry between China and the United States intensifies in this scenario. And also in this scenario, there is a very big non-aligned group that does not want to pick sides. So you can put in that group countries like Indonesia, India, much of Southeast Asia, and much of Africa. In this particular scenario, the thing which keeps this scenario alive would be a long-term conflict in Ukraine, combined with continued Chinese catch-up in terms of technology with the United States, which again threatens the primacy of the United States technologically and militarily. And a potential aggravating factor is if China arms Russia, in which case it's quite possible that sanctions would spread, the sanctions that we have on Russia would spread to China as well. Now, under this scenario, Switzerland is at the border of one of the fuzzy blocs, and it will find itself potentially being able to try and straddle blocs. That may not be possible in the case of advanced technologies for the reasons I mentioned earlier. The Americans may insist on no such sales from of products which have been made with American intellectual property and staff. But in principle here, Switzerland could straddle blocs. What Swiss firms will have to deal with is one important nascent trend we're seeing both from the United States and the European Union, and that is that both of those powers are weaponizing their supply chains, putting in place restrictions on how firms operate their supply chains, especially in countries which are not aligned with the democratic values of the West. And so there would be, under this scenario, supply chain reconfiguration. There would be pressure on sensitive sectors to restrict their sales to non-democracies, and Swiss firms that have commercial presences in Russia would come under greater pressure to leave. So this is one particular scenario, probably pretty close to what we're going to now, and this takes forward 5 or 10 years the current trajectory. So in this sense, it's a pretty good baseline scenario against which to compare the other two. So under this scenario, the world does not deglobalize and break into hard blocks. What you get is a lot more differentiation between groups of countries, but you have some countries which are on the boundaries between different blocks and some countries which are absolutely determined not to join blocks. And this is this big non-aligned group that I have indicated earlier. So that scenario, which I think is the baseline scenario, should be compared with two other scenarios that I want to put on the table. And the trigger perhaps for the third scenario, which is the retreat to regions, would be if relations between the United States and Europe really soured. So imagine the election of an isolationist US president in 2024, which then translates into many more Trump-like trade measures, which are very, putting America first and putting in place subsidies which seek to attract investments into the United States out of Europe. That type of isolationist, protectionist US president could well trigger the EU to give up on cooperation with the US and retreat into its own region. Relations could also sour, not just over subsidies, also over the use of technologies and the exports of technologies. And of course, the EU is very determined to impose border taxes on imports from countries that don't have very high costs of energy. And so these climate change regulations could cause frictions as well. And so there's a clear trajectory here where the EU and North America turn inwards in different ways. And in this trajectory, essentially the West doesn't form a fuzzy block, it actually breaks into two regional, substantial regional groupings. Now, in contrast, this would be contrasted to two other regions which are continuing to integrate, and I think we should expect that. And this would be the continent of Africa, which of course has signed its own continental free trade agreement and is moving at a pace to implement that. So that region wouldn't necessarily be turning inwards, but it would actually be integrating more closely. And of course, ASEAN, the Southeast Asian nations, are integrating as well. And so in this retreat to regions, we could end up having a world perhaps breaking not into blocks, but into regions, and where more and more trade is intra-regional, and less is inter-regional. So that's a scenario you might want to consider. For Switzerland, this is not good news because it ties Switzerland much more to the low growth European Union zone. Firms which are internationally active would probably have to develop region for region initiatives. So you would have a strategy for Northeast Asia, Southeast Asia, Africa. These would all be distinct strategies, and there would be strong incentives given by governments for firms to source locally, to develop technology locally. And so this would, I think, lead to a much stronger regional focus, region by region focus of internationally active firms. The last scenario I want to put on the table is the one where we have a fragmentation of the world economy into hard blocks. And this would be triggered by geopolitical events, possibly the biggest being, or the most likely being, conflict in the South China Sea. As I've argued, if China is determined to keep to its timetable for reunifying with Taiwan, then this is a scenario we have to take very seriously between now and 2029. If this conflict happens in Southeast China and the Americans decide to defend Taiwan, that's a big and, then you could quite likely see the world split into a Western democracies club, an autocrats club, and where there is a lot of competition for non-aligned, support from non-aligned regions and countries like India. So this conflict, now whether or not this conflict spills over and draws in the United States and Japan, I think will depend critically on the attitude of who is the next United States president. And if we end up having a very isolationist US president who does not particularly worry about the fate of Taiwan, then maybe reunification, even military unification, might not trigger this conflict that we're discussing here. But under any other scenario, we have to contemplate the possibility that there could be conflict in the South China Sea. What would this mean for Swiss firms? I think almost certainly it would mean that the free trade agreement between China and Switzerland would be abandoned. It would mean that the Northeast Asian region would be shunned in terms of investments because it was highly risky. And if anything, production would move from Northeast Asia to Southeast Asia, possibly to Africa or to the to parts of the Middle East and North Africa, which are closer to Europe. So production relocation here would be quite likely. There would be huge levels of risk and uncertainty associated with operating in Northeast Asia. So there would be a big change in this regard. And of course, one would expect a lot of sanctions between the autocrats and the Western democracies. So under this scenario, the world does indeed break up into blocks, but the trigger is likely to be a conflict in the South China Sea. As I said, I do not regard that conflict as inevitable. Much depends critically on both the actions taken both in Beijing and in Washington, DC. So my goal here in this presentation has really been to start off by asking some very big questions and then to try and tangibly answer them by drawing out the implications of 4 sets of scenarios for Swiss business and for geopolitics in general. And what I'd like to do now, I think, is stop and then try and answer any questions that you might have. And thank you for your time and attention.
Thank you very much, Simon. And I invite you all, dear listeners, to ask your questions directly in the chat, and Simon is happy to answer them. And we have one question already in place, Simon. That's, how do you see the importance of the Middle East in shaping these blocks, especially as we now see OPEC cuts, referring to your 4 scenarios that you presented?
So this is a great question because, of course, we've seen in the news just recently, literally in the last 24 hours, that there are going to be production cuts. And this, of course, is a signal that the OPEC club will not necessarily align, especially Saudi Arabia is not necessarily going to align with the Western democracies. So they become a very, very important swing player because I'm sure you will remember, one of the reactions to Russia cutting off or reducing its supplies of gas and oil to Western Europe is for Western Europe to source more from North America, but also from the Middle East. And so the Middle East has then grown in importance as a player and of course has a greater clout. At the same time, we've seen some pretty tense relations between the United States and Saudi Arabia, especially under the Biden administration. So I would see as one of these non-aligned groups, Middle East, and of course the Middle East is not a single player, but this group of countries are an important swing, have an important swing, almost a swing vote in this particular these particular scenarios. And indeed, the prospects for the Western democracies would look a lot bleaker if the Middle Eastern, or some of the Middle Eastern countries, sided with the Chinese and the Russians. And so I think that's what I would look for. Where will they go? Which side would they take? And they themselves, of course, I think the Middle Eastern countries recognize that they make a lot of money selling to both sides. So they have a strong interest in trying to straddle as well. So I think it's an absolutely legitimate question, something which is really worth following very carefully, but not clear to me that the Middle East would, or the key players in the Middle East will support either the United States or China. But there again, another way of putting this, maybe how China and the United States and Europe manage their relationship with the key Middle Eastern powers is something which we need to track very carefully, because this may end up deciding whether or not the Middle East fractures between the Western and the autocrat groups.
Now we have a question from Patrick regarding, do you see any dominant strategies for Swiss companies applicable to all or most of your scenarios?
Well, if you look at the more negative scenarios, and if you add in that remember the macro context I described, the cost of capital is going up, uncertainty is going up. We can expect some pretty tumultuous times between now and 2030 if some of these scenarios unfold. I think some very serious scenario planning is called for many companies, and how that plays out, I think, very much depends on any company's current footprint. So I'm going to resist the temptation to generalize here, because I think in my experience dealing with lots of different Swiss and German companies, their circumstances are so different, but certain things you can take for sure. There will be higher levels of policy uncertainty. There will be higher costs of capital. There will be slower growth, especially once we get beyond 2040. All of these contextual factors are there. Geopolitics and policy is going to play a much greater role. So those things are all going to be a part of board discussions much more going forward. And so, the stable, calm era of the past is largely over. And so I think what this might mean is that boards and senior management teams need to tool up much more in terms of geopolitical expertise and judgment, and in tracking these developments a lot more closely. Maybe that's actually the biggest takeaway. How that plays out company by company, I think, depends critically on what their current footprint is and what they want their footprint to be in the future when they look around the world.
And there's a question for Florian asking, if you were the CEO of a Swiss company with the production site in China and customers in Asia, would you consider relocating away from China? And if so, if yes, where to? And what would you do if you were a US company?
Okay, so if I were a Swiss, let's take the first question. If I were a Swiss company with a production site in China and my customers were in Asia, then it's not clear to me, well, let's be clear, if your customers are in Southeast Asia, then unless you have a very good reason to be close to those customers, then I don't see any geopolitical pressure to relocate. If your customers are in Northeast Asia, that is Japan and South Korea, then there are some of the scenarios that I've described where North Korea and Japan would not be sourcing very much from China. In which case, you might want to move some of that Chinese production to Southeast Asia so that you can service your Northeast Asian customers. If you're an American company, then I think this is different. I think the American companies will face intensifying pressures to leave, or at least to restrict their operations to China for China operations. And even in cases where a firm restricts themselves to only supplying the Chinese market from Chinese facilities, then that will have to be in some pretty low-end goods. So the American government, I think, will take very little exception with an American firm producing toys for the Chinese market, but producing technologies which can be used in semiconductors. Forget it, that's not happening. So I think that's how this will play. And I think the sector and product specificity becomes very important in determining what pressure the American firms that have operations in China will face.
Then we have a question from Frank. He asked if you could imagine that a separation into hard blocks could lead to greater stability in contrast to the uncertainties of a multipolar world. And in consequence, would it be easier to handle?
What Frank is describing here is potentially possible. You could well have a world that splits up into blocks, maybe an autocrat bloc, a Western bloc, and then various non-aligned blocks, and understandings are developed between them, which generate the stability that Frank is alluding to. But I think that one has to remember there's a fundamental source of instability in this system, which is that the Americans will not tolerate a Chinese threat to their primacy. So any understandings or stability which is going to be present would have to exist or coexist with that rivalry between the United States and China in areas of technology and the military. And so I think that's a real caveat on whether or not a world of blocks leads to more stability. It would have to be stability which is somehow immune from the technological and military rivalry between the United States and China.
And we have a question from Erwan asking, should Switzerland remain politically neutral in the future? Or are they even? And what could gain or lose?
I would, again, here maybe it's because I've now lived in Switzerland for almost 20 years. I think Switzerland's done rather well out of neutrality and not taking sides. But of course, its decision not to take sides in the 20th century was with respect to a conflict which was literally around it, but bordering it. A conflict, a disagreement or a conflict over Taiwan would be a different proposition. I would not be surprised if a lot of the Swiss public decided that they could support condemning China under those circumstances. And again, that's why I think if there was such a distant conflict of a first order like that, the China-Swiss free trade agreement would probably be the first victim. But how far, whether it goes much beyond that, I think is interesting. It will be interesting to see. We've already seen the debates within Switzerland over the Russian invasion of Ukraine and this whether to remain neutral there. And of course, those debates are very, very pointed. And so one gets the sense just listening to colleagues and reading what's in the newspapers that although maybe opinion is moving away from everyone being in favor of neutrality, one doesn't get the sense that the majority or a supermajority wants to abandon it. So I suspect it will remain.
Then we have a question from Matthew asking, investments in semiconductor industry are being shifted to the US for new technologies. Is it best to just forget dealing with high tech with China and its friends?
In certain key technologies like semiconductors, probably yes. And I think I'm sure many of you have read the book Chips Wars, which came out last year. And this book, I think, shows that this sector semiconductors is so central to technological and military supremacy that it is effectively, I think, will effectively be carved out of and will treat it very specially by all the big players. And so I think the notion of free trade in semiconductors, free investment flows in the semiconductor sector, this is not going to happen. We will see very heavy government intervention. I'm not saying that government intervention is necessarily going to be very smart. I'm not saying as a taxpayer I'm going to welcome having to pay for these very expensive fabs being built in Europe and the United States. But this sector, I think, is now essentially become heavily dominated by geopolitical considerations. So I think forgetting dealing with China and its allies in this particular sector, I think is very likely now. The interesting question is whether this spreads to other sectors, other perhaps cutting edge biotech sectors and things like this. I think that's the thing to watch for. And if that's the case, then we may end up with a growing list of technologies which are essentially off limits as far as trade between competing blocks are concerned.
How likely do you think there will be this spillover to other industries and sectors?
I think if there are major advances in biotech, very high, very, very high. So biotech, pharma, this could be next. Okay. The question then is, how far does it go? And again, I think what one has to look for, that's why one should look for technologies which become central to primacy, technological or military primacy. And once you start seeing very strong connections being drawn between those two, then that type of technologies, those technologies could easily join semiconductors as being off limits.
Then we have another question from Nick. Does deglobalization affect badly on the economic growth in general, or not necessarily, given the potential competition increase?
I think deglobalization, almost all of these block scenarios we've talked about, can't be good for growth and inflation, because they essentially are going to involve lots of stranded assets, production relocations to higher cost locations, and also reduced ability of many Western firms to be able to sell into fast growing China, or faster growing China. Let's say it's faster growing China. Having said that, to the extent that China's growth slows down and India becomes a faster growing place, Indonesia becomes a faster growing place, and Africa does between now and 2040, then the growth hit might not be that big, but it can't be a positive if you take the Chinese market out of the equation.
And a follow-up question by Nick is, can the metaverse development become globalization 2.0 in the future?
I wish I knew more about the metaverse to answer this question. But if you ask the broader question, to what extent are digital technologies going to get tied up with this geopolitical rivalry and cross-border data flows and cross-border technological flows associated with digital technologies? Yes, to the extent that that gets all wrapped into this geopolitics, then of course that possible growth driver is going to be reduced as well. So that's an indirect way of answering Nick's question about the metaverse.
I have a final question. Maybe you showed us at the beginning the graph from the McKinsey survey. What would you say are your top trend that have the biggest impact on CEOs? Would you have the same selection like they have, or would you switch positions? Say maybe something.
No, I think this is I think the top three there is probably the right top three. I think geopolitics being number 3 for this year. But remember, this McKinsey survey was about the factors which are relevant this year. So yes, I would put geopolitics in number 3, because really the biggest geopolitical factor I think which could upset things this year is if China started supplying Russia with arms and the West reacted against it. That or some Middle East event. These would be the geopolitical events for this year. But then I think even more important is the potential for financial instability and for inflation lasting longer and higher interest rates being higher. And that I think is right to be second. Whether or not disruptive digital technologies should be number 1, I think you could possibly question. Again, we tend to exaggerate fears about technology, and we tend to, it's strange, we tend to, when we are fearful of technology, we exaggerate it, and yet most of the time we overlook how technology could potentially advance our companies and organizations as well. So I can see why disruptive technology is there. Whether it should be number 1, I'm not quite sure, but again, I suspect there's very clear differentiation across sectors in terms of the susceptibility of current business models to different digitalization possibilities. Thank
you very much, Simon. There was no more questions, so I would like to end here today's webinar. Thank you very much, dear guests, for joining us. I hope you liked it as much as I did. Thank you very much, Simon, for this very insightful presentation and sharing your thoughts with us. Was great. I loved it. And now I wish you, a good lunch date with your WTO colleague. I think you should be in time, and hope to see you soon. Thank you very much, and good day. Thank you, Sasha, and thank you everyone for contributing. It was great talking to you. Thanks a lot.